because the 10-year yield falling alongside stocks just above 4%. Rick, you just heard the inflationary, deflationary comments. Comment on that and comment on this. Is there any part of you that believes that come hell or high water, the president wants lower rates and he's damn well going to get them, even if it means breaking parts of the economy?
You know, on the latter, I hope not. Okay, I can't get in the president's head. And even though his Treasury Secretary on CNBC pointed out that he wanted lower rates and they have gone lower, I don't think that's the way they wanted to get there. And in terms of inflation or deflation, I think it's pretty simple. Globalization was deflationary. Reversing globalization will be the opposite. Now, it doesn't mean all timelines are going to confirm that, because some of this is just a trade. Many are trying to peg all these moves in a cerebral way with very complicated fundamental or economic thesis, but it's not necessarily the case. Sometimes it's just many individuals, many institutions, many investors getting out of long-term trades, and the market gets jostled around. With respect to the globalization, this definitely sped deglobalization along. But in my opinion, it was going to happen one way or the other. So you either tear off the Band-Aid in a quick fashion or you let it fester over time. Because after the 40s and World War II, when the U.S. economy was so far ahead of all the other economies that we didn't care if we made good deals. We didn't care if we helped the competition. We helped the Japanese, the Chinese, the Europeans, because they were so far behind. If it was a race, we couldn't even see them. But times have changed. Now we compete. And when you compete, it's not that they're not allies in a cultural way or allies in a way of benevolence. Of course they are, and that hasn't changed. But we compete. And anybody who's been looking at some of the rhetoric between China, the U.S., the Europeans, the U.S., the people that are into more green issues in the U.S., and all these, we could see that there was a uniform elitism in globalism that many in the United States didn't like, and in many countries they didn't like. And that divorce is going to cause lots of instability. But we're not going to be able to really see the details for at least a quarter or two. None of this is going to catch up with the markets and the way we measure the economies in a very quick fashion. But I do agree with our one guest who said that most likely the markets are going to get used to this in a much faster time frame, and I think cooler heads will ultimately prevail.
Rick, can I ask you a couple of tactical questions? What do you think happens with the 10-year from here, and what do you make of the dollar weakening?
You know, see, here's what I think. I think all the conventional wisdom about what was going to happen, I never put much confidence in it. The thing I put confidence in is, for the moment, the only hedge against nervousness in stocks is going to be the Treasury market. Will that be forever? I can't tell you that. In terms of the dollar and Treasury rates, look at my charts here. Everything goes back to October. And when I see that kind of symmetry, it doesn't make me nervous, because many of these correlations have not broken down with the volatility. In other words, 2 and 10-year yields are on pace to close at lowest yields in 6 months. If you look at the dollar index, the dollar yen, the euro versus dollar, the pound versus the dollar, they're all comping to early October, every single one. That gives me some confidence that there's a certain part of this move that, as fearful as we may be with volatility and uncertainty, there is not necessarily an instability to what is going on. Right. And what's more, if you look at the major low in the dollar index from April 22nd, 2008, that was a 40-year low in the dollar. If you look at that chart, it's my last chart, what you'll notice is, other than the last 4 years, we have not spent a whole lot of time above 100. So to me, there's a lot of mean reversion going on in foreign exchange that I wouldn't worry about.